Hey, welcome back to the Hub channel. My name is Brandon, and we have an amazing show for you today. As you guys know, there's so much going on in the market. So we're going to be doing a market review. We're going to be going over the Fed announcement and what that's going to be doing to our markets. Check out our portfolio performance and go over our current live trade. And I have Mike back with me today, and I couldn't tell you of somebody more excited to be here today because there is just that much going on in the markets right now. As you know, Mike is the founder of Michael Wade Trade Coaching, and he is here for some fast, short-term profit, high probability trades. And Mike, oh my gosh, you saw everything go on yesterday, right? And you saw the Fed, the announcement, obviously a big deal for all the markets. I guess the Dow liked what was happening. The markets liked what was happening. Crypto liked what was happening. So why don't you give us your take on what's happening and why that was so crucial for him to pause rates now at this time in our lives?
Yeah. Good morning, Brandon. It's always a pleasure to be with you. Yeah, the economy is in bad shape. You know, we have high inflation. Consumer debt is over $1 trillion. Consumers are running out of savings. There's a lot of pressure on the market, and what the Fed's been doing for the last year and a half is lifting rates. And the last two announcements, he did not, when I say he, I mean Jerome Powell the Fed did not lift rates again. He did say, though, that they reserve the right, they always have that right, to lift rates in December. The Fed meets again in December, and that'll be the last one of the year. The issue that we have is that inflation is really not cooling off enough. In fact, there's a little graphic here we can show you here, but the Fed did say that the economy's really booming, basically, economic growth. That's not what he wants to see. We got to see a cooling off of inflation to get inflation back down to 2%, which is where he's going to take the interest rates eventually, hopefully. And then there's things that have been said about the interest rates being held higher for longer. So when you take a look at a chart, here's what's happened as a result. Yesterday, the markets loved it, as you said, Brandon. The markets loved the news. No interest rate hike. We're okay. And then the markets gapped up here. And this is the SPY chart. This is the ETF that tracks the S&P 500. And the line I had my eye on yesterday was this 200-day average here. That's a rock solid support resistance level. And we broke below it here, came down hard on lots of volume. And then yesterday we bumped up against the 200-day average. That's like a ceiling or resistance. And this morning, so that's a follow through day. And I was anticipating that the SPYs would find resistance at this blue line here and then come back down today. But when you go to the futures, the Dow, the S&P 500, the NASDAQ are all up and big. The NASDAQ's up big here. So the market's shaking it off. I was expecting these resistance levels to hold. They did not. So it looks like that we might have a bit of follow through. Indeed, the SPYs are up here above the 200-day average as I speak. And then perhaps even more compelling is that yesterday, the NASDAQ, this is the triple Qs, the NASDAQ 100 ETF, closed yesterday above this really solid neckline here. All right, this was a head and shoulders pattern. It started forecasting further downside after it broke below. And then yesterday, the NASDAQ closed above that line. And as I speak, the NASDAQ is set to open even higher. 1.2, that's a big jump to start the markets this morning. So Brandon, maybe to my surprise, the market is really following through from yesterday's announcement. And I would say my forecast, which is a fancy way to say guess, because, you know, we're always predicting the future and we simply don't know what's going to happen tomorrow. We know what's going to happen in 10 minutes. The SPYs will open up here. They'll gap up above this 200-day average. So then I look at my support resistance levels, and I can still see a downtrend here. There's a high, lower high, lower high, lower high, and then lower lows. That downtrend is still intact. So my guess would be we'll hit 430 resistance and maybe even the 50-day average And based on the fact that inflation is really not going away, I would anticipate once we hit the top of this maybe 50-day average or so, that we'll see a further downslide. So that's my guess. I don't know what's going to happen, but Brandon, I don't really care because the sniper approach is opportunistic. I'm looking for
Yeah.
good or bad news.
Well, yours,
It doesn't
yeah,
really
yours
matter.
are more short-term trades, which is better in any market, regardless of the total trend. You just mentioned the trend line is still in a downward sloping trend, but like you said, it doesn't matter. And so, what happened with your trade last week? We talked about ALGN. What happened there? How did that trade turn out?
Well, the week before we did Netflix, and I
Oh
consume
yeah, yeah,
Netflix. I don't know if you
yeah.
do. I love Netflix and
I,
Amazon
I I've,
Prime.
I've watched it. I've watched it once or twice.
It's
Yeah.
like an addiction. So we made money on Netflix a week before, and then Align is Invisalign. They make the braces. I was an Invisalign customer, so I love it when I can make money and pay for my habits. Netflix habit, getting my teeth done. And we did. We made really good money on this trade. This is a risk graph that I use to track all my trades. And we sold a credit spread for 120 bucks. And then we did it on this day here. There was really terrible news. I guess Smile Direct is eating Align's lunch. And the stock tanked on really bad news, bad earnings, lowered their future guidance. They basically said, "Hey, we lost a lot of money. We disappointed, and it's gonna be bad next quarter too." So when that news comes out, coupled with a dramatic drop in the stock, the probability is just sick. It's just amazing. And what happened? We got in on the 26th. That was last week's show. And then the stock, that was this day here. And then the stock proceeded to drop. 3 days later, the following Monday, we bought the spread back for 12 cents and netted 29% in 3 days, 3 trading days, basically. So that's the kind of world we live in. And, we've been doing really well. Well, we have 2 trades on a board, and 2 trades, doesn't make a system, but we're off to a good start, Brandon. As I look at my performance report for the trades, I use software to track all my trades. Of course, 2 trades, all winners. Our average return has been per trade on average 22.69% over 4 days. So far, it's early days yet for what we're doing here, but 22% on average every 4 days is where we're running at the moment. So
Yeah, you've
that's
had a
where we're at, Brandon.
solid couple of trades. Yeah, solid couple of trades there, Mike. And 22% over 4 days is annualized is absurd, which we don't talk about those numbers, but it's a really good trade. That's not that you're beating the S&P. We'll say that much, Mike. You're beating the S&P. So, that's what we compare you against right now. Is the S&P. So what's next on the docket for us? What are we talking about?
Oh my gosh, man, there's so much coming in right now. And I struggled a little bit to figure out which one that I wanted to do. And what I look for is news. And we're in earnings season. There are so many companies that just announced earnings either last night or are about to this morning. And you can start to see things like Peloton shares sink on wider than expected loss. Bad news for paid subscriptions. So when you start seeing those, they're opportunities. And one that came up, and believe me, I'll give you a few others that I think are good as well. But one that came up, just one of many that came up was Roku. So let me show you this chart here on Roku. And I believe we have a graphic here as well. But here's Roku. And yesterday, Roku closed right down here around 60. And then Roku came out and said, "Hey, man, we blew out our earnings. We're adding subscribers, and we're going to make even more money next quarter. So they beat expectations on earnings, and they said next earnings period it's going to get even better. All right, so currently Roku, I can show you this in a live chart here. I'm using Hub's charting package here, but what I'm going to do here is take us to 1 hour, and this is what Roku's done. So this, let me zoom in here so you can see this a bit better. All right, so this was not Friday. What's today? Wednesday. What day is it? Where am I?
Today's Thursday.
Is it? Okay.
The day after the Fed meeting. That's what we're talking. That's what we're doing.
Now
the
I
day
know
after
where
the
I'm
Fed.
at.
That's our whole calendar is based on the Fed meeting and what they do. That's it.
Yes, that's it. And they do it 6 times a year, or 7 or 8. So here we go. Yesterday's close was right here, Brandon, right at around 60. And then the market closed. They announced their earnings, really good earnings, and the stock gaps up to 70. So the stock, as I speak, is trading around 69.25. So that's where we are. This is the post-market. This gray area, this blue area here is pre-market. And pre-market, the stock is around 70. And let's go back to the regular chart here. I'm going to go to just a regular daily chart. And now what we know is that the stock, which was yesterday at 60, is now way up here at 70. So here's the deal. Here's the idea here. Let me get this thing repainted so we can see the 200-day average. Okay, it's not coming in just yet. All right, well, you can kind of see it here. That should come in here in a minute. So now we have this 200-day average right here, which isn't being shown just yet. The stock is way up here. And so what I want to do is draw a line in the sand. Like, where don't I think that Roku is going to make it back to? I need this 200-day average. So let me see there we go. I got it. Okay. If I can manage my chart here. Here we go. And so now I'm looking at the chart, and Roku's up here at 70. All right. Now, do I think the stock is going to drop from here? It might. It might drop for sure. It's possible that it drops. But what's going to stop it from dropping are support levels. And there's many here. 70 itself is a support resistance level. And then we've got the 200-day average, which is a super strong support level. And so, like a sniper, I call the system snipers. If you imagine wartime, you've seen plenty of movies with snipers in them. They're way, way back away from the heat. They're not even close to the battle. They're from a long distance, relatively safe, engaging the enemy. And it's the same kind of thing. Where could I sell, draw a line in the sand where I don't think the stock's going to make it back to maybe in a matter of days or even a couple of weeks? And so basically what I need to do here is decide where I want to put my line in the sand, I call it. All right. So I wouldn't sell at 70. I could sell at the 200-day average, and we're off. We're going to place a live trade on this one here in just a sec. So there's Roku right there. It's already above the 50-day average, and it's running hard. I got to move a little bit faster because I want to grab this trade right at the open when the implied volatility is higher. Meaning, what's that mean? There's like a feeding frenzy right now, and option traders are going after Roku. And so the market makers are trying to fill all these orders. There's a lot of demand. So the pricing is higher now for this spread than it will be in 30 minutes. So I've got to stop talking, which is hard for me. And here's what I think. I want to sell at 63 down here. So I'm going to draw a line in the sand at 63. Now, I don't know what I can get for it, but that's about where I want to sell, right at 63, a little higher there. 63 is also support. It was resistance here. It was support there. So now, for me to get into trouble, once I get this trade on, the stock's going to have to close below 70. It's going to have to close below 67.5. That's 2. It's going to have to close below the 200-day average. That's 3. It's going to have to close below 65. also support, that's 4, and then we might get into some hot water. That's it. So probability, this is all about stacking up probability. So here's what I want to do here, Brandon, and I'm creating some spreadsheets here to help us understand how to place these trades. We're going to do a credit spread, and the credit spread is basically going to say this: we'll make money as long as Roku stays above 63 over the next handful of days. There's actually a trade that expires tomorrow. All right, I got to stop talking and let me go right into a simulated environment. This is Thinkorswim, and I use this so that I can simulate these fills. I want you, this is a live trading show, and I want you to be able to place these live. So that's what I'm going to do in front of you. So Roku is our stock, and I've got all these expiration days. Look here, Brandon, we can maybe put on a one-day trade. And I'm going to do this a little bit fast and then come back and describe it to you. So then I find this 63 trade here. So this is a Friday trade now, and I got to move pretty fast here. It's going to allow me to get 6 cents on a $1 spread. So let me go ahead and show you what that looks like. So if I could get 6 cents on this trade, that's a 6% return by tomorrow at 4 p.m. 6% like that. So if I did that, then we could, with super duper, like almost probably 100% statistical probability of profit, that we could grab that 6 cents or 6 cents and 6% in this case by Friday. So I'm going to try for it. And now it's at 8 cents. That's even better. Let's go ahead and grab, let me see, how many do I want to do? If I can get 8 cents, I know this is not making a lot of sense, but I'm going to come back and describe it. That's 9% by tomorrow if I can get 8 cents. Then the question becomes, well, how many contracts do I want to do? Well, if I did 5 of them, my max risk would be less than 500. I'll come back and describe that. I want to get this before we lose it because it won't be there very long. I'll do 5 contracts. I'm going to be selling 5 of the 63 puts, buying 5 of the underlying, showing 7 cents. I'm going to try to get 8. This is a fast game. I know I'm talking fast, but I want this before it goes away because it will. So this is, I'm asking 8, showing 11. I might have to let that sit for a little bit. Let's just grab it at 7. I think 8 will fill, though. I should let that run a bit. Let me let that run just a little bit. I'm going to leave it at 8. And now let me go back and explain what we're doing here. Okay, so that's what I'm going for. And so with a credit spread, what you're doing is you're selling something for a credit. And that thing has a max value of the width of the spread. So if you look here, what I'm trying to do is sell a $1 spread. All right, that's a dollar wide. I just got 9 cents. Woo! That's a beautiful thing. 0.09. This is a 10% return by tomorrow afternoon. I've done 5 contracts. So let me show you the order then. So what I did is I sold the Roku, sold to open, the Roku November 3rd 53 put. I bought to open the 52 put underneath as a credit spread, and I just got 9 cents. All right, so that is the trade. Now the next thing to do once you're in is to specify when you're going to get out. All right, so the first one is stop loss, and we're going to get out of this trade if the stock closes less than the short put, which is 53 in this case. So this is the most important part because we lose about 1 out of 10 historically speaking on these. So 9 out of 10 are winners. Typically the stop loss doesn't really kick in very often, but we need to be good traders and manage risk. So that's the most important one. And the second is to buy the spread to close for 10% of the original credit. All right, that's 9 cents. So what I'll do next is go right in here, find my fill order, create the opposite order, and then this will create the closing order. And I'm going to say buy this back for a penny. All right, that's about 10% of the original credit. We sell for 9, we buy back for 1, and we net 8 cents on a $1 spread, which would be in the neighborhood of what, 9% by tomorrow afternoon. So I've put that order in, and now like a trap, it sits out there. And the minute this spread drops in value to a penny, we're out, and we've captured about 9%. And again, Brandon, this is by tomorrow. This will expire worthless tomorrow if the stock, Roku, is above 63. Is it going to get there? Doubt it. It may come back a bit, but the 200-day average should act as solid support. And remember that Roku blew out their earnings. Roku raised future guidance. They're adding new subscribers. Now, Brandon, this is very similar to the Netflix trade that we did 2 weeks ago.
Well, okay, so many questions, Mike. So obviously, and I just want to recap a couple things here just to summarize what happened. Obviously, we're sitting at market open, so that's the reason these things are moving so quickly, and we have the spreads that we do. So right now, you're trading right at market open, which is important to note, I think, here, because as we go throughout the day, these spreads are going to get a little bit tighter, and you're not going to get as much profit margin. And you base your probability trade on the fact that you think Roku's going to stay above 63, which is a really high probability. You said almost 100%, which obviously it's not 100% because nothing's 100%, but it's a really high probability trade that we're going to make 9% on this trade tomorrow. Could we have just let this trade expire worthless on both sides of the contract, or did you have to put that closing order in?
That's a really good question, Brandon. Really good. Well, you know what? The answer is yes, you can let them expire. And this is one in which I would consider doing that. You know, what you got to do is just keep an eye on the stock. And, you know, if the stock drops, then you may end up having to buy it back for more than 9 cents and lose money. But yeah, you could. Here's the thing, though. And again, because we're out of this by tomorrow and the markets are bullish, markets are rising, it's very doubtful. So this is one case where I would consider it. But if this was a 2-week trade, for example, and that's typically where we roll, usually 7 to 2 weeks, 7 days to 2 weeks is where we send a 10 days average usually. Then I would definitely buy it back, because here's what could happen. Imagine for a minute that Roku went up to 75 and you were able to buy the spread back for pennies on the dollar, and then you didn't because you wanted to get those extra couple of pennies, and then while you're waiting a week for that, the stock could gap down. So the basic process here is risk management. That's the name of the game. And Brandon, to be more simply said, yes, you can let them expire, but while you're waiting for them to expire, there is gap risk. And why not just maximize probability and not deal with any possible gap risk and take them off for 10% of the original credit?
I love that answer, Mike. You explained that really well. It makes sense to me. So this might be like one of those situations where it's only a day trade. You could potentially make it expire worthless, but I like where you said you want to risk manage. You want to make sure that you're helping yourself out as much as possible, because yeah, what if it does gap down to 60 if you're waiting 2 weeks or whatever it is, and holy crap, you lost all your profit. Mike, oh my gosh, I love your trading style. I love the way that you approach this, and I love the trades that you've put on for us the past couple of weeks here. So Mike, there's a lot of people watching right now. Where can they find out more about you, about your service? Where can they sign up to get more of what you have to offer?
Yeah, well, I have a website, believe it or not. It's called, it's mwtradecoach.com. And I went on a mission. I've been on this mission for a while, but a new expression of it started in July 13. And what I do is I put community and support, lots of coaching, live trading, structures, risk management, distinctions, psychological distinctions, to really give people an environment within which they can succeed as a trader. This is a hard game for some people. It's not that hard, but psychologically, it's challenging for most. And so I've been doing this for 25 years, and I love people, and my partner and I, we love to be in service, and that's what I have here. It's a mastermind trading community of active traders, and you can find out more about us at mwtradecoach.com.
Well, Mike, thank you for that. As always, and just like I said before, I really love your trading style. I love the high probability short-term profits theory behind your trading. It works out well for, I think, what a lot of people are going for, and the way you explain things is really well. So I really appreciate that, Mike. Thank you so much for coming on the channel again today, and we look forward to hearing about this trade, how it plays out next week, and getting more info from you, obviously, Mike. Thank you so much. And for all of you guys watching, be sure to like and subscribe. Be sure to follow us and go ahead and check Mike out. He knows what he's doing, and we will see him again here next week here on the Hub platform. We'll see you guys in the next one.